for the profession as well as for the regulator was to contact the third country auditors to inform them on the requirements in Luxembourg, as it sometimes vary quite significantly with the requirements in the other EU jurisdiction. And I think that's one piece where probably for everyone it will be easier if one day, you know, across Europe, we transpose the legal text in a similar manner so everyone can apply the same rules. And also to assist basically the auditors from Luxembourg and from third countries, the IRE has issued an FAQ, which is summarizing the various, the background, the requirements for issuer, but also the diligences required from the auditors. And on the slide, you can also see the text that we have drafted and that needs to be included in the auditor's report. Now, one of the points that we also have, and one of the questions we have is how can we identify the latest version or the final version of the XBRL filing? Because if you include your signature, then it will change, you know, the value of the ESEF filing. So I would like to point out to one initiative that was led by the Dutch Institute of Chartered Accountants, which has developed a hash generator, which basically allows the auditor to communicate a unique value to the board of directors to identify the final version of the ESEF financial statements. And also allows the auditor to check if the version that has been published on the company's website is the same as the one they confirm to the board. Maybe, Ronald, you want to share a bit more your experience on the hash generator, as I understand you've been leading part of the process.
Yes, that's no problem. Thanks for that. And that's also part of communication. It's about, okay, how to identify the final version. We, in the Netherlands, at least in the working group of ESEF, of our Dutch Auditors Institute, the NVA, has thought about it. Okay, how can we make that happen? How to do so? And our chairman of the working group has created a hash generator, published that on the website as well, and it has been shared and used by many countries because it adds value, and that is part of solving a problem, communicating about it, and sharing the knowledge. Are we there yet? No. Sure, the hash generator has done its job. It allows us to calculate a hash of our ESEF reporting package and help us to identify, oh, this is the final version. But what I see also is about how that's for the communication between the auditor and the issuer. We are not there yet to include a hash total into the auditor's report that the users of such auditor's report can see and check themselves. Oh yes, this indeed is the final version. This indeed is the version that the auditor has signed off on. Technically, there are options to explore, but that hasn't been implemented. It could also be digital signing of the auditor's report, for example, but those are topics for future years. And the key element is then also about how to make that happen consistently across Europe. Because the hash generator was created in the Netherlands, shared between different people and being used, well, even in Luxembourg, but I also know that it has been used in Sweden and also in Italy. But for example, how to audit and how to report on ESEF was quite different across member states. And I was at least pleased how the regulator in Luxembourg communicated to third country auditors proactively as about this is what is coming. It's all about communication. But that communication was, I believe, key also for a success, that at least those third country auditors became aware as about, oh, my client has to report in ESEF, my client needs to do something different. And oh, by the way, as auditor, I have an obligation as well to look into it. And then it becomes about, okay, are we knowledgeable? How to get it? How to get that knowledge in those third countries, especially if it's beyond the European borders. And that was also quite a challenge, but with the help of the people within Europe knowledgeable about ESEF at that time, with hopefully already a year experience, we managed to do so. Mel, maybe you can share about some resources that are available in Luxembourg.
Yes, so as I mentioned, we have a FAQ which is available on the ERE website. And I think, Arun, we can share the links later on or make them available to the wider audience. As I think it's quite helpful and people can see how Luxembourg and auditors in Luxembourg have thought about the requirement for ESEF. And also for the framework for issuers, I think we can share the link for the transparency requirements, which have been updated by the CSSF earlier this year.
Okay. Thank you. Then I think, no, I don't see any questions yet on my chat. So, but if you have questions on these kind of topics, please use Slido. And then I will hand over the word to Francesca, because you in Italy did something different, especially for financial services.
Yes, indeed. Thank you very much for the presentation, Ronald. You know, focusing on financial services, I think the background is this is a market with a highly you know, regulated type of services. Therefore, every time that a new regulation comes into place, then it's always a challenge, you know, to let it apply immediately. And so there's lots of noises, discussions, and trying to find an alignment across Europe and European countries. Which are not really the same in terms of local regulation jurisdictions, then is always, as I said, a challenge. But I would say that also for me, as you, Ronald, it was a success, because at the end of the road, we implemented successfully. You will see here that we found many and several issues in between, so in the process of implementation, but finally we got there, although there is a final next step also on this first phase of ESEF. So if you go ahead to the next slide, yeah, here you can see what's happening, what happened in Italy. So already in 2020, Banking and Insurance Association initiated roundtables with the top tier insurers and banks. This is because actually the framework of Italy is a bit unique, because Bank of Italy, but also the insurance regulator, has given the players fixed schemes, and therefore they follow those regulations, and they had to translate the fixed schemes of financial statement into the XBRL tagging. So local regulators have been involved in the discussion since 2020. And of course, then there was the pandemic and many issues around, you know, financial services in general. So has been a bit of delay at the beginning, but then in mid-2021, then they were all on board for implementation. Of course, there were two speeds, because the top tier players, then they were the first implementing ESEF, but then smaller financial institution realized in mid-2020, 21, that was timing to really implement a bit quicker and faster such regulation. And so they started involving board of directors, the auditors, auditing firms, external auditors, and they started also to share the issues with the local regulator. So in terms of the implementation oversight, and I really link to the first presentation we had, yes, indeed, I agree that actually what made the difference was not just the speed of the implementation, but the preparation of that. So a good planning, good IT tools, and very efficient IT tools, and then the execution of it and the validation at the end. So in Italy, of course, there were some IT providers that were better placed than others. And so most of the top tier banks and insurers have really got the same IT tools. But then there were two typical IT tools, the IT technical tagging one, and then there were other specific tools for the validation. And so they were using two different IT tools, and they're still using it. And what we did as auditor, we tried to follow the process of implementation, also from an IT and technical standpoint. So where we could see already some batches that didn't really match with what our expectation were, then we started to talk directly to the IT developers and providers. And so try to give some inputs and trying to share also our knowledge with their knowledge. And we learn a lot on our side as well. So if we go to the next one. Here is a common baseline for Italian financial services. As I said, financial statement fee schemes for banks and insurers as well, but banks in particular with the 262 of Bank of Italy circular. Then Italian regulators have been alongside with Banking and Insurance Association, ABI, ANIA, were involved in the roundtables that took place starting from 2020 to 2021. And so there were lots of discussion in terms of translation, understanding of the regulations. And then there was a high degree of automation and centralization of tax choices. What I said to my colleague earlier is that financial services is a highly regulated type of market. And of course, FinRep and COREP were implemented, upfront in the previous years. And FinRep really aggregates lots of information that now we are trying to replicate also under ESEF. So it was difficult for financial services to understand really what was the, let's say, the added value given by ESEF compared to FinRep. But in the process of making all the financial statement preparation as more digital, as more automated, as more comparable to the others, I would say that in Italy worked fairly well, but because there were such roundtables. And so players could agree with each other what they meant and what they could translate the ESEF regulation to. Then,
Francesca, is that only specific for banking and insurance, or is that being applied for other industries in Italy as well?
No, in terms of the specific tagging, it was only on this market, because I'm sure in the other industry they had lots of discussion. So to understand what kind of tagging or IT providers were going for, but it was a different, let's say, background, and playing field, because in Italy you have fixed schemes financial statement. So you imagine if they were not going to happen, such roundtables, it would have been a nightmare for us as auditors, but especially for preparers and also for readers of the financial statement of ESEF, because you could see the same fixed schemes for financial services and then completely different tagging, although the schemes are the same, and so you couldn't really trace and track what kind of translation was there. So I really think they did a good job in that sense. And now we hope that it's going to happen also for the next phase, that some discussion will happen upfront, but I haven't seen starting this yet. Then if we go further, internal policies and procedure documentation is still under development. So our next steps is really to understand that as auditor, that although the procedures and approvals, reviews have happened this year, now we want to get it documented a bit more to really be aligned with the financial statement close process as financial statement. Now we want to see a similar process, a similar documentation for ESEF. Also, initially, Board of Directors approved the financial statement prepared according to the ESEF format. And also in few cases, we've seen the presence of consolidated financial statements that have been tagged with the ESEF and XBRL tagging. And also we've seen some preparers that have chosen even to use ESEF format for individual financial statement, not just consolidated. And so we've seen those few cases. If we go ahead to
just one question before we continue. You mentioned the Board of Directors approved the financial statements. Are there any thoughts, ideas, plans for having that approval digitally signed in those financial statements?
Yeah, absolutely. Actually, top tier banks and insurers really uses all, digital signing for not just financial statement, but also for business plan, strategy, and other documentation internally. So discussion is that actually, because this is a digital financial statement, should be signed off digitally. Of course, you cannot expect that all banks and all insurers will have, the same tools and the same ways to sign off this digitally, but they are most of them are expecting to get digitalized by 1 or 2 years ahead.
Yeah, I think that is one of the areas where a lot of work has to be done in Europe to harmonize that, to make because there are a few ways how to implement such, and we all benefit if that is being in a harmonized way, so we can use the same kind of tools, at least to validate whether that digital certificate or digital signature is valid or not, and read that kind of materials.
Yeah, indeed. And we've actually seen that where board of directors are quite aged in certain companies, then they had to print out actually the tagging. But now they got used to it, and so it's not going to happen again, which is paperless as it should be. So yes, absolutely, we need to harmonize all the process. So next slide. Is about main implementation challenges. Ronald, you have mentioned this already, but I want to say that this is not a failure. This is a success, because we started like this, and then all those graphs that you see impact red and yellow and green became green. So, we turn it into green with a very good collaboration between IT providers, auditors, and sector associations and auditors association. It was lots of discussion around that. So the main issues and defects that we've seen it was about IT issues over the preparation of the financial statement. Is a financial statement. And for instance, what really made us work harder was that each amendment we were asking to do, even if minimal, so wording change or not really tagging change, causes the restart from the beginning of the entire process, because some tools were not prepared to make amendments, because they thought also because there was a fixed translation that banking association and insurance association provided provided to all players, they thought that that was done, and so no amendments were going to come into place. But then when we said that we were not in agreement with that, then it was a very long procedure. So I think our job cost more than we expected, but at the end, again, it was a success. Also, some control activities had to be performed on the English version. As you know, we have a local, the Italian version and the English version, or any other regulated European market language translation. So we had to audit both of them, and sometimes they were prepared on the Italian version, but on the English or French or other languages version was again the process to be reviewed since the beginning. So for us, it was a bit hard at the beginning. Then there were missing field tagging, as you said at the beginning, or they were incorrect in the financial statement. Even the presentation link base, I know it sounds ridiculous to say those things, but because they came up so many times, I wanted to highlight, and maybe you can share with us your same experience, but as auditor or as a reader, but like the link base wasn't working, especially the presentation link base. It was not consistent with the structure of the financial statement, so had to start the process again. Or calculation link base did not report all numerical links. I know that happens in all implementations, but in this case, it was more recurrent than in other projects.
And I recognize those kind of mistakes that happens quite often. And for the presentation link base, some will say, well, it is about tagging, and all tagged items are just data and information. But from an IFRS accounting perspective, it is the order of the elements, the order of the line items are important and has a meaning as well. And therefore, the presentation link base, it is one of the requirements, should follow the structure of the financial statements. So yes, I fully agree with this, and I recognize this kind of conversations with clients.
We are very happy that actually auditors were on the same side, and none was actually an outlier saying that certain defects, certain error were less important than others. But we actually made the point and the same point. So I think it was also good for our category of professional to find a common platform.
About common platform. Did you also have discussions about materiality? Because at least in the Netherlands, from my view, that has become sometimes an issue, because some mistakes are not the same as others, I would say.
Yeah, we didn't talk about materiality, but about significance. It's like there were some errors that were typical errors of when someone implements for the first time a new project and a new IT tool. And so we actually recommended the client to ensure that such errors will not happen in the next future. And so we help them to go through the phase of remedial plan and remedial actions. And so now we know that they fix it, but because of course, even the sign off of this ESEF financial statement was actually quite strict, then we had to agree with the client on certain defect that we thought they were not so important as others. I would say the level of relevance is different. I agree with you. But
yeah, and that's also start with what Bartek has said, is about plan and communicate, because if such errors are identified way up front, it's easier to communicate, it's easier to fix it. And if that is done in a later stage, then yeah, you have challenges because the sign-off date is already planned off as well. And then you start a discussion about the relevance or the significance of those issues. Yes.
Yeah, no, absolutely. But even like there were images on an ineligible format or hyperlinks or the hash that it wasn't prepared correctly. So there were different type of mistakes or issues in the implementation, but then we tried to find a level of relevance compared to the entire implementation project. And at the end we got there, but except for one part that I think is really still important, and I already mentioned to you, and is in the next slide. And I think is our work and is our commitment to let financial services institution to understand that this type of process should be documented properly as financial statement is. And also because I'm sure the local or the European regulator in the next future, when the ESEF regulation will come into place entirely, so on the first and second phase, I'm sure that when they will come to verify if everything is in place, it will verify also the process and how has been documented, how has been verified, not just from the board of directors or the auditors, external and internal auditors. But it's really important to describe the additional activities carried out, identifying the functions involved, defining the roles and responsibility, defining the expected controls, and also trying to understand how the process is flexible for future amendments, because we don't know, as IFRS or ESRS in the future, all principles or concept and everything that is related to financial statement change. And so it can be that even ESEF will have amendments, upgrades, even the IT tools. They need to have a flexible structure which will allow all users to go back and forth, to amend, to upgrade, but without letting the process begin again or start again. Otherwise, it's a waste of time, and especially in terms of controls are not robust enough for any readers and any users of such information.
Yeah, they should take the learning experience and the steep learning curve they have experienced in the first year, bring that along to next year. And next year, it's not just a redo, because there are some challenges, but to that later on. So yeah, go ahead.
Thank you. That's all for me. So very success story for now. Take it this recommendation if you can on the process and documentation, and then good luck for next year. We will try our best as auditors to really accompany companies in the next phase, which for at least for financial services will be more challenging than the first phase of implementation. Thank you.
Yeah, thank you. And we should bring these kind of success stories and considerations to the next level. And Bartek, you want to elaborate a bit more about what is coming next? What are the challenges we are facing for next year or beyond that?
Yeah, absolutely. I think we need to go back to my
slide
second
3,
slide,
I think,
which was somewhere towards the
slide.
beginning of the presentation.
Yeah. Amanda, go back one slide, please.
Many slides, actually. Go back probably like 6 or 7 slides.
Yes, that one.
Yeah, that one. Yeah, next one. Yeah, that's the one I was looking for. So yes, we all said here that block tagging is coming, and that's the main topic for the next year. However, I wanted to note that many refer to this as block tagging of the nodes, but it's not exactly true. There is a list of mandatory tags that ESMA requires or the regulation requires. And on this list, there are the notes, but there are also accounting policies. And there is even a couple of numerical tags that relate to dividends. So even though we all say block tagging of the notes, it's actually not necessarily not only the notes. It's much more than that. So we need to remember that it's not as easy as 30 notes. It's probably plus 30 accounting policies, plus a couple of numerical tags relating to dividends. And the other thing is there is a lot of uncertainty how exactly to tag. So the US SEC rules, for example, are quite clear. One note, one text block. On the ESEF front, at the moment, we are a bit unsure because there is this list of mandatory tags. And for example, you can see here the note for finance income and finance costs. There is a tag on the list that says finance income and finance cost, but there also is a tag for finance income itself, and there is also a separate tag for finance cost. So the question arises, should you use just one tag because it's one big note, or should you use maybe 3 tags because each section of the note needs to be tagged separately because there is a tag on the list? So there is a bit of uncertainty how to go about that block tagging. I do hope that the new edition of the ESEF filing manual will make that clear, because there will be a new one soon. And I know that issues like that are discussed also by ESMA and the national regulators. So hopefully there will come a conclusion. But if not,
and I've seen also from XBRL Europe some questions being asked already from the best practice task force.
Exactly.
Similar to this example is about sure, the regulation says the closest, narrowest accounting principle, but this is a great example about the challenges we face. And to be honest, we haven't spelled out what the true answer would be. So that time will tell. And
exactly. I hope it will clarify the filing manual. But if not, I would say everyone needs to discuss it with their auditor, because ultimately it's the company and their auditor that will make the decision what needs to be tagged and whether the tagging is okay or not. And so that discussion will need to start sooner rather than later.
Yeah, and I think that also all the member states, audit institutes in every country will have this kind of discussions as well, to at least come to the same kind of approach, the same kind of requirements about, okay, this is how we should read and interpret the regulations.
Yeah.
And the other thing is, of course, the last part is, of course, the Corporate Sustainability Reporting Directive, not for this year, but that is coming along, and sustainability reporting will come along, and tagging has been mentioned as being become applicable as well. So we should stay focused on that as well. But with
absolutely.
an eye on my clock, and I see Harun already being present. A final note from you, Bartek.
I see that as well, so I'll be quick. I just wanted to make sure that everyone knows that there is an International Sustainability Standards Board that has been established, and this board has even published an XBRL taxonomy last week for review. So if you are interested in that, I just wanted to mention that there is a taxonomy that you can have your input on, and it's been put out there on the ifrs.org webpage last week.
Okay. Thank you.
And
thank you all.
We had one question. I don't know if there's a time to answer this question very quickly, because we've been asked whether there is some best practice example for block tagging. Yes. And unfortunately, to my knowledge, there isn't any, because of the reasons that I've mentioned, that there is still some uncertainty about how exactly to tag.
Yeah, so we will wait, and once we've seen and spot that will probably be shared. Thanks for your time, Bartek, Mile, and Francesca. Thanks for your insights. That was, I believe, quite insightful. And I will hand it over to Harun.
Thank you very much, Ronald, and I fully agree with you. It was quite insightful. And apologies once again for the technical issues we faced in the beginning of this webinar, but we will make sure that the final recording will include the sound as well as the view as well. So now we are moving into the second session of our webinar, which is about the CSRD, which is already mentioned, and interconnected digital reporting. For this session, John Rowden will be facilitating the discussion. John is the iXBRL leader at PwC in the UK, and also a member of the ESEF Audit Task Force of Accountants Europe. Hi, John. May I hand over to you?
You may. Thank you very much for the introduction, Harun. Good afternoon to everybody, and welcome to the part of this this webinar that's going to look directly at the Corporate Sustainability Reporting Directive. I've got the pleasure of being joined by three great speakers, each of whom are going to give short presentations of no more than 10 minutes, and we're going to have some Q&A, time permitting, to follow that. The past 2 years, as we've heard, has seen ESEF land right across Europe. Digital tagging of listed company financial statements, just a few pages to begin with, sometimes only sort of 5-6 pages with tagging out of a document that's 300 pages. The technology already existed, and the rules have been around since 2019. It sounds pretty simple, doesn't it? Well, it's not too early to say that the implementation of ESEF has been, in the broadest possible terms, a success. There are thousands of filings now available in a digitized format. The next phase, working out how best to consume the data, is already underway. But implementing has, as many of us know, been anything but simple. Legislators, regulators, software providers, preparers, and auditors have had to come together to build a new financial reporting ecosystem. Talking and listening takes time, it takes energy. Building anything, whilst deeply satisfying, involves hard work, willingness to compromise, and flexibility. Many people will have found 2021 and 2022 a defining period for their careers, perhaps for their lives. But the work is not all done yet. Refinements will be a work in progress for the indefinite future. But make no mistake, the ecosystem for digital financial reporting now exists. So what is going to happen next? Well, the answer is already known. A big step has been taken to deliver iXBRL tags to users of listed company financial statements. Delivering more tags to cover more information is the natural next step. And we've heard how it's underway with block tagging and one or two of the issues connected with it. But I think nothing has captured people's imagination more than the ability to digitize the emerging disclosure requirements relating to sustainability in general and carbon emission reporting in particular. There's a lot to do. The preparations are underway right now, and I'm so pleased to be joined by three professionals who are right at the heart of those preparations. You're going to hear three different perspectives on the broad challenge ahead. I'm sure you won't hear all the answers. There are too many moving parts for that to be realistic. But I hope you get some insights, I'm sure you will, on what is going on, what matters most to those closest to the action. So without further ado, I'd like to introduce our first presenter, Richard Boson. Richard is the head of XBRL at Amana and an expert on digitalization. Currently, Richard is seconded to the European Financial Reporting Advisory Group, commonly known as EFRAG. Richard, good afternoon.
Good afternoon, John.
Welcome to you. And I think your slides are already up on the screen. So
yes, thank you very much.
Please go ahead. I'll
thanks.
turn my camera off and come back on towards the close.
Great. Thank you, John. I think it was a very nice introduction. And indeed, the CSRD, the Corporate Sustainability Reporting Directive, is really a revolutionary thing that is happening in the digital reporting world. And let me provide you a little bit the background on what this is about, and especially with a focus on digitalization. And yeah, I'm also happy to answer one or two questions, and of course. So first of all, the EFRAG is the European Financial Reporting Agency that has been mandated by the European Commission to develop sustainability reporting standard. And there was a project task force, the ESRS project task force, which I joined last year. And we worked very hard on delivering a first draft of the reporting standard, of the European Sustainability Reporting Standard, that has not just been published as an exposure draft on the webpage at EFRAG, and it covers a wide range of sustainability reporting topics, as you can see here on this slide. For instance, of course, the environmental reporting, climate change, pollution, water, and so on, but also social aspects and governments. And as a matter of fact, this reporting will take place, or those reports will be published as part of the management report, which means that many companies will have to do this in the coming years. The official roadmap is that the first reports should be published 2024. Yeah, but probably there will be some little bit of a delay. So please don't nail me down on those details. But what I definitely can tell you today is that the exposure drafts have been published. They're out at the EFRAG webpage, and there are many PDF documents covering each individual ESRS, for instance, E1 for the climate change. And you can download those PDFs, and then very important, first of all, read it, and then very important, answer and consultation on it. So there is an official consultation happening right now. You can still participate. It's still end of June. You are invited to participate in this consultation and give your opinion on this one. The CSRD also foresees the digital tagging or digital markup of the final reports, of the ESRS reports that will be prepared by companies in Europe. However, in order to have a digital reporting, like similar to the ESEF actually, we need to have an XBRL taxonomy. This XBRL taxonomy is not yet done. EFRAG is still working on it. And this is also quite natural because it's a pretty big task to create an XBRL taxonomy. And the standard itself is not yet final because it's just open for consultation. So it might take some time, a little bit of a delay, till the XBRL taxonomy that is actually reflecting the standard will be published. So please go to the next slide. This is the status regarding the digitization that I can give to you. Right now in our cluster, which is the group of experts I'm working with at EFRAG, we have defined data definition templates, which are basically Excel-based templates where we put all the disclosure requirements in it. We do a digitalization readiness check and provide it to the standard setters, discuss certain disclosure requirements. And also I would like to invite you to participate in the consultation. If you have any digitalization specific comments on the standard, we would be very much interested in it. So please answer the consultation in this regard as well. We also created an XBRL taxonomy inside EFRAG. However, it is just a very small one, not covering the full standard yet. It's called a proof of concept taxonomy because it's just covering a small set of climate change related disclosure requirements. And as far as I know, it will be published tomorrow. So it will also be, you will also be able to download it from the EFRAG webpage. And I think that should be a good way to actually look at it from a technical perspective and to, for instance, to do some dry run or field test with this XBRL taxonomy to actually create some reports. Keep in mind, the XBRL taxonomy must be a 100% representation of the written standard. So the digital taxonomy should be having exactly the same information, the same disclosure requirements. And this is our goal, of course, in EFRAG, to create an XBRL taxonomy that reflects the standard 100%. Yeah, and I think from my point of view, it also makes a lot of sense because when I look at the last ESEF webinar at Accountancy Europe, I had this idea, that this dream, you know, of the digital reporting, which we kind of achieved with ESEF already. But for the sustainability reporting, we should not have the same situation like with the financial reporting, that we have paper-based reports for a number of years and then do a big shift to digital reporting. In this case, it should actually from the beginning be a digital reporting world. And that's very important, I guess. Yeah, so that's my dream, to also not only have financial reports as digital reports, but also sustainability reports, which, by the way, the consumers of the data are requesting very much as well. Okay, can you please go back, go to the next slide? Right, thank you. So the standard setters, this is just a slide to illustrate the process that is happening right now. The digitalization experts like myself are actually in the middle, right? We read the standard that has just been drafted or is still drafted by the standard setters inside of EFRAG. Then we provide feedback, we model in XBRL taxonomies, we create illustrative report to test those taxonomies, we use various XBRL tools to test and validate those reports as well. And of course, it's an iterative process till you finally have an XBRL taxonomy that makes everybody happy. Yeah. And then in the end, this XBRL taxonomy can be used by preparers, it can be loaded into tagging tools, and yeah, sustainability reports can then be tagged. And can you go to the next slide, please? Yeah, as I mentioned, I think it's obvious for most of you that the XBRL taxonomy is a very technical thing. So it will be provided as a zip file, as a report package, as you might know it from the ESEF taxonomy. There will also be human readable representation in a PDF or Excel document, or you have to use proper tools to actually view those taxonomies. On the next two slides, maybe we can very quickly scroll through the slides. I just showing some screenshots of the taxonomy on the right side and a sample report on the left side. And you see it's quite similar to, for instance, the ESEF, where you have on the left side the financial statements and on the right side the IFRS taxonomy, where you can just drag and drop. So the process is similar. However, keep in mind that the underlying data might be a little bit different. The actual standard, the ESRS standard, foresees a lot of narrative reporting and also yes/no questions and drop downs. Basically, you can think of drop downs, which we don't have in the financial accounting world so far with ESEF. Yeah, and on the next slide, I think that's the last screenshot. There is a viewer showing a tagged report where you can actually click on the data points, and then you will see on the right side which tag has been applied to which content. Yeah, I hope that is I'm sharing some insights into what is happening at EFRAG, and I hope it's useful, John.
Richard, thank you very much. I'm sure it is, and with publication scheduled for tomorrow, clearly this is a fast-moving area with a lot to do in a relatively short space of time.
Yeah, but I'm so sorry that it's not the full XBRL taxonomy for the full standard. Just a little bit of the standard is implemented yet. But anyway, I think it's a good. I'm happy that we finally can publish it. Right? I agree.
Well, let's hold that thought and come back on the panel session for Q&A, because now it's time to move to our next speaker, Andromeda Wood. And Andromeda, who many of us know as Andy, is Vice President of Regulatory Strategy at Workiva. She monitors regulatory developments that are happening to understand how they will affect Workiva's services, their customers, and the market in general. Andy is also a member of the XBRL International Best Practices Board. Andy, welcome this afternoon. And
thank you very much, John.
And over to you.
So, good afternoon, everyone. Thank you for joining us today. I'm just going to talk very briefly about some of the practical aspects related to the implementation of something like a new taxonomy related to sustainability standards. So if we just hop to the next slide. So I'm actually going to start with a brief note on something that was the topic of the previous panel, which is what happened with the European Single Electronic Format when it was implemented for financial reporting. Now, I know we heard sort of a bit of talk about where there were difficulties and where there were some problems, but also in general, a feeling that we were looking at a success story. And I wanted to start there for looking at moving forward with sustainability standards, because a lot of the preparation and work that went into producing these figures, which is from a survey that we conducted of about 540 or so companies across Europe, to actually result in companies producing reports that they not only felt satisfied with, confident in, but also that they genuinely felt were going to improve investor experience, which is something that is, we know, very important and very relevant to the future of using and having digitalization of standards in the market. So I think in order to sort of apply how we get to this state for sustainability tagging, if we move to the next slide. So obviously a number of things were done for preparing for ESEF. But I think one of the things that we can say is, despite the fact we are now only just seeing proof of concept taxonomies for sort of the two big headline efforts in producing sustainability standards, so that's the ISSB. As Bartek mentioned, they've already published a proof of concept, and now it sounds like we're also going to get a proof of concept from EFRAG. It's important to note that that doesn't mean there is no sustainability tagging available in the market, or that it's not possible to see demonstrations or see exactly how that should work, and the processes that can go into producing a good digitalization experience once the CSRD has finished through its regulatory processes. So I wanted to highlight a couple of those. So the first one I just wanted to highlight is relatively recent, which is obviously in ESEF in the majority of countries has so far primarily only been applied to the financial section of the report as per the mandate. But in the UK, there was this option to also provide some optional tagging of various sustainability related information with that. And there was a company that did do such. They provided that voluntary tagging using a UK taxonomy provided for that. And then I think the thing I really wanted to point out was that Experian International then used that to produce a dashboard. Now, I think this is particularly important, not just because it shows that that tagging can be done with an XBRL taxonomy, but it demonstrates why it is that digitalization is so important to this initiative. It's not really so much about, say, I know many people kind of think of it as a burden. It's a sort of a regulatory addition. Maybe it's primarily for the regulators and then for them to be able to perform their activities and their analysis of statements when they receive them. But that's very much not all this is for. The digitization is very much about enabling this ESG data to make its way into the market and to be able to be used by investors and to be able to use and produce dashboards and analyses like the one demonstrated by Experian International. If you want to see this demonstration, you can see that it's a public Tableau board. I think the easiest way to find it is probably to have a look for the Experian International news articles on the website. But this was just a very, very quickly put together, and it was possible to do that because the digitization of the information was available, and obviously lessons that have been learned from the production of this statement, even in a different taxonomy, will be very, very helpful when looking at how to work with the new ISSB taxonomies and the new European Sustainability Reporting Standards taxonomies. And I think just to sort of highlight another area where we already have implementation experience that could be drawn on, if we look at the next slide. So again, we see that there was a taxonomy produced by the SASB, and they went through a process to produce a taxonomy that we would hopefully see, and I know we will see from, for example, the ISSB taxonomy. But there were particular steps in that process that I think it's quite important to highlight, because as time has gone by, we have become better and better at producing these XBRL taxonomies. There is more experience in what it takes to get something to market that can be used. And so, for example, in the case of working with the SASB taxonomy was not just tested during consultation, it was tested during production to ensure and see what it would look like when it was actually used in real live tools. So as well as saying, here is a taxonomy that may be abstractly used in production in the future, the taxonomy was tested to say, well, what happens if we try and use it now? What happens if we put it into software? It was tested alongside other taxonomies with the expectation, as I'm sure many of you know, that the intention is very much in many jurisdictions for sustainability information to be sitting alongside financial information. And again, it was tested by tagging on real life disclosures. So not just sample documents, but also disclosures that had already been produced by companies that were voluntarily producing pieces of disclosure against the SASB standards in the market for their sectors. And I think I was very encouraged to see, EFRAG mentioning producing those sample documents, because it's a very, very important part of the process. In order to ensure the success of this digitization at the European level and the international sustainability level, it's very, very important that the taxonomies that are produced are tested very strongly against the real life disclosures, as well as very, very closely aligning to the actual standards that are produced. So we're basically really looking forward to seeing this digitization evolve. And I know I will have some more points to make about this during the discussion that we're going to go with next with our question and answer session. So I will stop there for the time being, and I will allow John to hand over to the next person. Thank you very much.
Well, thank you very much, Andy. And I have to say, the questions are already flooding in. But before we get to the Q&A, we are going to go to our third speaker, and that is René van der Meij. René is the Business Unit Manager on Accountability Reporting at Visma Connect. He is the co-chair of XBRL Europe's ESG and Sustainability Working Group. And as a member of XBRL Netherlands, René is a member of XBRL Europe's Executive Committee. René, you've got even more hats than I've got. I can congratulate you. Since 2014, René is involved in the Dutch SBR program, first by developing taxonomies for the Dutch Chamber of Commerce and the Dutch banks, and later on he became responsible for all standardized business reporting services that Visma Connect has developed for the Dutch government. René, welcome, and over to you.
Thank you for the invitation, John. Happy to be here. So I'm here on behalf of the ESG working group today of XBRL Europe. And together with some active members of the work group, we are writing 4 white papers discussing the necessity and possible solutions for interconnectivity of ESG data and financial data, of course, by using XBRL. And so to be clear, we are not focusing on interconnectivity between ESG standards itself there. So full credits go to the members of the working group who are the main authors of these white papers. So if we go to the next slide, why do we want to achieve interconnectivity? This might, of course, be already clear for most of the audience here today. So let's shortly highlight this. Note that I'm not an accountant or an auditor myself. I just want to highlight the general reasoning behind this. So sustainability data provides valuable information to financial users, as it is very forward-looking. Laws and regulations are becoming more strict on sustainability topics, including emissions, of course, which will result in taxes or fines. So this will directly affect financial performance of a company in the future. Next to that, in order to compare the efficiency of achieving the sustainability of objectives, financial data is key. Financial data is very comparable for these kinds of measurements, and also investors can use this kind of data to find any greenwashing activities. So the interconnectivity is also clear in the following example of the next slide. So here we see 2 separate reports referring to the same concepts or line item. So in the green, the ESG report is given in which energy expense can be an important reportable concept to disclose the energy consumption. This concept is already defined in financial reports as part of the expenses of the income statement. So ESG standard setters often refer in their drafting standards that financial concepts should be using the same definitions as is used in their financial reporting of that entity. So here we see 3 main challenges which can easily be defined on connectivity. On the next slide. There are many relations between ESG topics and financial topics. Financial and ESG taxonomies come from different standard setters, which is also a very important aspect of this problem, since they're not working together. And the third one is harmonization and normalization is needed, as you want to use the same definitions here and reuse the definitions from the financial taxonomies. So these relations are everywhere within the sustainability topics. Just to name a few, any sustainability disclosure with the related share of activity, such as turnover or cost of sales, and also the expense and income on resources and resource consumption. For instance, the strategy for renewal of assets, with better ESG performance and useful life for assets used for amortization and depreciation, and also, finally, provisions for subsidy allowances with emissions targets. So for a user of this data, this connection should be clear when using these kinds of reporting. So if we go to the next slide, we see within a draft requirement, when disclosing information related to its financial exposure to pollution-related incidents, the undertaking shall include the estimated amount of turnover lost of consequence of these incidents. So then questions arise on how can a user know the accounting policies related to this turnover when looking at the ESG data? Is this consistent with what I can find in the financial statements, and how to find that? And how do I know relevant data related to turnover has been disclosed elsewhere in the report? So these examples already show the importance of the interconnectivity, but it's important for much more stakeholders, as we see on the next slide. So we can go to the next slide. Yes, thank you. So for users of data, discovery of useful related data improved decision making is necessary. But we already saw that. But for standard setters, a framework to ensure robustness of standards and ease of implementation. So there are different standard setters for financial and ESG data. It will be very hard, if not undoable, for ESG standard setters to include interconnectivity with all the financial standards, as they are not responsible for the financial standards, and the amount of local gaps is too much to interconnect with. Thirdly, for issuers, it should be very clear what requirements are so that they can start on time. They will need assistance to start report building software by vendors and financial consultants. Finally, for auditors, unambitious formalization of requirements are needed, and assistance to consistency checks is necessary. So on these topics, we are writing these white papers. So if we go to the next slide, we can see what we described in our first paper, which is already released. This is on how interconnectivity can be reached between two different taxonomies. And it's, of course, without any modification of base taxonomies necessary. As we see in the next slide, interconnectivity can be reached redefining relations between a financial and sustainability concept. This can easily be done by adding arcs for relationships. In other words, there is a relation, or parent-child relations can be used. In other words, a used concept is part of a concept elsewhere in any taxonomy. Or thirdly, a formula can be used, but this can be quite complex. It can be used across multiple taxonomies to check on consistencies or make concepts parts as roll-ups, for examples, but formulas are not meant for expressing semantical meaning in the end. So all these things are discussed in the first paper, giving an overview of all these kinds of options, really a general introduction to these topics, next to explaining the need for interconnectivity, of course. So if we go to the next slide, we see we're also working on the second paper at this moment. This paper focuses on standard setters and supervisors on interconnectivity. So interconnectivity results that taxonomies can be interpreted as once, but consistency of architecture is needed there to get there. As we see on the next slide, as discussed before, standard setters are only responsible for their own standards. So how can they make their taxonomies easy to interconnect with? As we can see on the next slide, on slide 12, for the supervisors, there are many governance items also to keep into account. For instance, can I reasonably expect issuers to interconnect their custom concepts, and how? So the second paper is planned to be released next month. And after that, we will also publish two more papers, as we can see on the final slide. Paper 3 will really focus on the data consumers and as main audience, such as analysts. And it will describe use cases for exploitation of interconnected data. And paper 4 will focus on issuers. Interconnectivity as a tool to assist data collection and report building. Now, for the last two papers, we are still in need for some input there for analysts, NGOs, and auditors and issuers to join us to get this perspective right. So if you'd like to join, please reach out to us. And the first paper is available already for downloading at that address. So this is what I wanted to state for now, John.
Well, thank you, René. Thank you to all of our speakers for energetic and crisp presentations. Really very, very much appreciated. And the good news is it means we've got, well, almost 15 minutes or so available for questions. And well, I'll just give people a moment. If our panelists could come back on screen. You're all here. Welcome back. We are going to now start with a question that has come up in some different guises on Slido, and we are nothing if not responsive. And it is to understand a little more, get a little deeper in this relationship between the taxonomy being developed for EFRAG and the ISSB's taxonomy, and just help people understand a little bit more how they sit alongside them and where they might go in the financial reporting process to follow. And well, we haven't agreed who'd go first on this one, but Richard, you're very close to the action working for EFRAG, so may I prevail on you to have a go first on it?
Yes, so that's indeed an interesting question. So right now the CSRD so the CSR directive, which is European law or will be implemented as European regulation, is mandating companies in the EU to use the EFRAG taxonomy. However, indeed, there is also the ISSB taxonomy that might be used by preparers maybe on a voluntary basis, yeah. And there's also the question of combining both, harmonizing both, and because you should keep in mind that they are indeed also based on some underlying standards like the TCFD framework or the GRI standard, which they took some parts of, and so that indeed it should be possible to harmonize it a bit. I'm not an expert in this, to be honest, and I should probably not talk too much about this situation, since I'm only working for EFRAG, as you might understand. So it's as you see, it's indeed also a little bit a political thing. There are activities like René also mentioned, where people try to find ways to harmonize or to connect, provide mappings between taxonomies. There are several working groups I'm aware of, but keep in mind, as long as the underlying calculation rules, for instance, for greenhouse gas emissions or consolidation circle is different, then indeed it will be hard to compare the numbers. Yeah, and but let's see. Maybe there will be some harmonization, and indeed I know that there are some ongoing discussions. But right now the EU companies will be mandated to use the ESRS taxonomy.
Thank you, Andy. Anything you'd like to add to that one?
No, I mean, I think it's I think the key to the whole situation is that obviously each of the taxonomies is being developed to reflect their underlying standards. So any calls that, if for those who are concerned about this issue, I think the appropriate thing to do is to provide feedback to the relevant authorities that it would be very helpful if the ISSB and the EFRAG organizations were able to work together for those standards to be consistent where possible. We do know that, of course, they are both working from the existing frameworks, very heavily involved with all those different organizations. And of course, the ISSB is literally formed from the merger of several of those organizations. So I remain optimistic we'll see a little bit more general consistency between those as that happens. But yes, unfortunately, the technology, while it can aid with mapping, it can't quite remove the differences between underlying standards.
That's well said, right?
And René.
Yes, well, I'm also quite positive actually to see where we are 2 years ago and where we are now, which we now have two major standards emerging there. But also what you see already just by looking at the standards is that there already are coming together more and more. Also, if you could look into the setup of the standards with an industry-specific and an entity-specific layer in it, which is and both taxonomies will be part of it. You already see that they are already getting more and more together, and I hope this will continue in the future, of course.
Well, there we go. Three good answers. I reflect on how standard setters these days now, if they're setting a new disclosure standard, having a taxonomy is the default thing to do. if they weren't going down the paths respectively that they're going on, people would be saying, well, where's your taxonomy for this? So this is normal. If I look at what's going on with ESEF, I mean, we have the IFRS taxonomy going through a filter, which is that it's actually ESMA that decides what are the rules, what are the items in the taxonomy that you download and have to use. And I wonder if we'll see ESMA playing a role like that in connection with both of the taxonomies in deciding what taxonomy tag by tag should be required when we get to that phase in the process. So there's a long way to go to play out on this one, I think, but a lot of people are going to be watching it closely, and a great question asked several different ways, and hopefully we've been able to illuminate a little bit there.
Maybe, John, let me add one sentence to this. So you should keep in mind that indeed ESMA is supervising the listed entities, but the CSRD scope is much broader. So it's covering, right, I've seen the latest calculations, about 50,000 companies in the EU. So it's also mandatory for non-listed companies, for larger companies. And then it's not clear yet if ESMA is actually doing the supervision then as well for those companies.
It's a good point. I'm going to turn now to a practical challenge and ask a question about difficulty. How difficult do you expect the digitization of sustainability information will be, particularly compared to the challenges of preparing the underlying information that is to be digitized in this area? And I'm going to start with Andy on this one.
Yes, I mean, I think that's a very interesting question, because obviously this webinar is very focused on what it takes to produce the digitization of a report. And, you know, we've started with the experiences from the financial information. We're now looking at how those translate to the digital information. But I think one of the other things that it's really important to ask ourselves is, how major is that topic? How difficult is that effort when we're looking at the full scope of a reporting process? Now, I mention this particularly because I know that when, for example, a proposal for a standard or a regulation is going through the negotiating works, one of the things that can be tempting to do is try and find some easy things to slice off it in order to maybe improve or reduce the burden on preparers. And if you're sort of running your mind yourself mentally through the process to prepare some sustainability information, data collection, I think we find that's pretty much non-negotiable. Whatever happens, those sustainability standards have their scope is being negotiated a little, but we know they're covering all of ES and G. There's significant effort that has to go into the analysis of that. Companies also have to do work on materiality assessments. They need to ensure that they have sufficient control over that data. They will also be making sure they are reporting it securely in their reports, potentially in multiple locations as well for voluntary purposes. And then we also have audit on top of that, and assurance, even though at the moment that scope is proposed to be limited assurance. And then we have digitization. And I really do question sometimes the focus on how hard that digitization piece is. And I think some of the figures that we quoted, we focused on what we had to get right. We focused on all the lessons that we've learned from the digitization of financial information. But I think we also need to focus on the outcome, which is that data now exists. Roll forward for the next year is significantly less painful process, even with the introduction of a new piece of requirement like block tagging. And in the grand scheme of the importance and the usefulness of that digital information, I think the effort accompanying the burden potentially on a preparer to produce that is by far one of the hardest pieces of the process. In fact, I might also argue it's potentially the easiest part of the process. And, you know, from the demonstration you can see of that Tableau dashboard, it's potentially one of the more important pieces of the process. Once that information is correct, if it is not accessible to investors, if it is not accessible to those putting together their financial instruments, then we don't have a trusted data circle within our sustainable finance system. And that's a way, way bigger question than I think, you know, maybe knocking a little bit of a burden off for some preparers.
Thank you. Thank you, Renee.
Yeah, well, first of all, I think digitization of sustainability information is not a separate subject in reporting, but it's integral in reporting. So in my honest opinion, there is no other way than tackling these kinds of issues on reporting than digitizing. I hope nobody wants to do these kinds of things on paper anymore and collect this data, just writing it down on their notebook here. So that's also why it's very important to start with thinking digital from the beginning in this process. So what we see is that many information is already stored in system nowadays, but it's not standardized, of course, and it's in different systems. So that's where the challenge will be for the coming time, to come to one single source of truth in the end. So, and the other aspect is collecting information from the supply chain, which is necessary in some standards nowadays. So standardization on this aspect would really benefit companies there, since they all have to collect this information from their supply chain, and they all have to deliver to these figures to their customers itself again. So there will be lots of administrative burdens if this is not standardized all together. So that's where the real thing is, where we should work together, in my opinion.
Thank you, and let's bring in Richard.
I agree with both of you. So I think the preparation of the data is much more work or much more challenge than the final last mile tagging process. Yeah? So indeed, especially when looking at the IFRAC standard, it's quite a big standard. Yeah? It has a lot of reporting requirements and disclosure requirements, actually. And that is the true challenge to get the underlying information that you need to prepare the disclosure. The tagging will probably be way easier. Yeah. Also compared to ESEF, because keep in mind, companies are doing IFRS statements that, since many years, and then the digital reporting requirement came with all the taxonomy extensions, anchoring, and all that stuff. Right now, we have both. We have the standard plus the taxonomy that reflects it 100%. So the tagging itself will be not as burdensome as you might think. Yeah.
Okay, thank you. We have time for one quickfire question, and we're going to come back to something that Richard was talking about. But just your hot take on the following one: do you expect the tagging requirements to apply to a broader set of companies than already reporting under ESEF? What would that mean for those not currently preparing ESEF, but would be caught by this idea that other companies will need to tag CSRD information? And for that one, let's start with Richard and then move from there.
Thank you, John. So yeah, right now, as per my understanding, the CSRD requires a lot more than just the listed companies. So those are already doing ESEF to do this sustainability reporting. And there is some category like that is currently also under negotiation on European government level, I guess. So we will see where we end up in a few weeks or months, probably. But yeah, indeed, it will be a much broader scope. And there are also indeed questions that are coming with this conclusion that we will have not only ESEF filers having to do this. It's, for instance, what do we do with local GAAP, right? This is one of the reasons why René and the working groups are also very active on this area, because if you have local GAAP, then it's not the IFRS taxonomy that can actually be used if you would take the financial statements, or we might have definitely we might have preparers that will only take the ESG information and not the financial information itself. Yeah, which then leads also to things like that we need to have a turnover that is defined in the ESG taxonomy. Why? Because we don't have a turnover that is tagged anyway in the financial statements. Yeah.
Thank you, Andy.
Yes, I mean, I think it's we have seen that scope proposed. I also know that we see lobbying to reduce that scope again. I think this very much goes back to René's earlier point about value chains and supply chains. I think it is an incorrect assumption that the only ESG data that matters to the marketplace is that of the listed companies. I think it matters to a substantial number of individuals that data is also accessible for the larger private companies and potentially even further than that down in the supply chains. And at that point, it's important that that digitization is available. As you know, Richard very correctly said, this does mean there are some open questions about how that happens. But we know, and I'm sure René is about to talk about, there are plenty of examples of XBRL programs that exist on those private companies already in the market. And quite honestly, I've talked to companies who literally have no idea they're preparing that XBRL. So I think it's another one of those areas where it's important. I think there will be some things to decide, but it's eminently doable.
And you bring things around very adroitly to René and the standardized business reporting perspective on this one. René.
Yes, well, of course, from a data user perspective, I certainly hope that it will be extended, the tagging requirements. I don't think that the tagging is the problem for these kinds of reporting, but much more getting all the information into place to be able to report there. And in the end, the more standardized data which is available, the better it will be for analysts, but also for issuers. So, of course, there will be a big trade-off in company size on if and what to report on these kind of topics. But in the end, this will make the market bigger and therefore more interesting for software vendors also to step in and make innovative software that really helps the market to report on these topics. So I'm really in favor indeed of extending these kind of tagging requirements to everybody in the end.
And there we must leave it. I have to say, it's been an absolute pleasure working with this panel and getting ready for this session. Three people who know so much about this topic, and I'm sure are going to be very important to the way it unfurls in the coming months and years ahead. Thank you so much to all of you. It's just been a pleasure to chair this part of the session, but time has defeated us. We had more questions, we had more answers. I'm going to hand back now to Haroon. Bye.
Thank you.
Right.
Thank you very much, John, and thanks to speakers as well. I fully agree with you. It was a very rich discussion, but to be continued for the moment. And now is the time for our last session on ESAP, European Single Access Point, which is also another big EU IT project, and it's related to both ESEF and CSRD, actually. William Gatenberg and Ambrose Murray will briefly explain what ESAP is and where we are with it at the moment. William is digital reporting thought leader at PwC Netherlands and also vice chair of Accountants Europe's corporate reporting policy group. Ambrose is public policy director at EY for the geographic area of Europe, Middle East, India, and Africa, EMEIA. William, I'm passing over to you. Thanks.
Thank you, Haroon, for these kind introductory words. Introducing the European Single Access Point, Accountancy Europe and the profession actively support transparency and digitalization of the EU capital markets information. We try to add value by actively participating in the discussions and consultations, and specifically to increase the quality and trust of reporting, which of course is of special interest to our profession. So far you've heard about ESEF and CSRD, which are two sets of reporting requirements for companies. Now, for the information reported by these companies to be accessible to investors and other stakeholders, it must be filed and disclosed by an officially appointed mechanism, which is usually known as a business register. Currently, every member state has its own OAM, and sometimes even multiple. There is no single way of accessing this information at EU-wide level. Now, that is where ESAP, the European Single Access Point, comes in, and the purpose of this and its background are being described now by my colleague Ambrose Murray. Ambrose.
Thanks, Phil. Thanks very much for that, and thanks, Haroon. Yeah, I thought you've had quite a technical discussion, so maybe this won't be so technical, but I'll give you the political background to ESAP, where it came from and its genesis. So maybe if you see it in that light, you can understand where policymakers are coming from in relation to this. And I suppose we nearly have to go back to the financial crisis 12 years ago to start to see the genesis of this. So we had banks under severe financial stress, and there was failings of a number of banks. And the EU, together with the member states, were very hard to resolving this. But after that, there was a view of our capital markets, and our capital markets in Europe have been fragmented. While we have as big an economy as the US, we only have a third the size of the capital market, or half the size of capital markets, and a third the size of debt markets. So what the idea was that companies shouldn't have to rely on banks to raise finance. They should be able to rely on the capital market. So an idea was put forward, the Capital Markets Union, and the Capital Markets Action Plan was put forward in 2015. And this had 33 measures, and 30 of them were completed. Around 2018, 2019, they were completed. But we still didn't have a Capital Markets Union. And maybe some of the criticisms were that maybe it was low-hanging fruit. A lot of the measures that were done were easy ones. There were reports, consultations. There was only 3 or 4 legislative proposals. And then, of course, what happened as well in the meantime is we have Brexit. So we have the largest capital market within the Union going to be outside the Union. So there was a real drive to look at this again and do Capital Markets Mark II, Capital Markets Union Mark II. There was a number of reports, and the reason I talk about the reports is this is the first time we saw ESAP. But there was a number of reports out there. A lot of people took it on themselves to write Capital Markets Union reports. The next CMU report was done. The European Banking Federation did a report, was very good. CEPS did another report. But the Commission appointed a group called the High Level Forum, led by Thomas Wieser and some other respected individuals around in the financial area around in Brussels. So, for example, David Wright, Marie-Louise Albuquerque, Peter Prate, and it was also involved major asset managers, JP Morgan, BNY Mellon, BlackRock, academics, Euronext, and there was observers from the ESAs. They came up with 17 measures, and number 1 measure was ESAP. Now, ESAP is not a unique measure. It's the first time I've seen it was in this report, but it was based on what already exists in the US called EDGAR. And it's a one-stop shop where companies can go, put all their financial information, and then investors can also go there and see where to invest. And it seems to have worked there. So we're looking for a European ESAP. And I think what the HLF, the Visor report said, a single access point would remove one of the main obstacles that discourage investors, especially from other member states or third countries from accessing smaller national capital markets or providing funding to SMEs. So funding to SMEs was a key part of this and getting funding on the markets. So to create such a single point of access for investors, existing national and EU registers and databases of company data should be interconnected. This was reduced, and then from there, the Commission, this came out in during the first COVID lockdown, June 2020, and then the Commission wrote an action plan based on that with 16 actions, and the first action was the ESAP again. This was then taken to the 27 member states, and they agreed it, and they were very strongly supportive of both financial and ESG, non-financial information, sustainable information to be on this. So that's what we have. So we have a report, we have a Commission backing, and then we have the backing of the 27 member states. So there's a strong push towards this this piece of legislation. It was eventually produced with 4 other pieces of legislation in November 2021, and together with LTIFs, AIFMD, and MIFIR, the consolidated tape. So this is the first tranche of 4 pieces of legislation for the Capital Markets Union, second point. So it is itself, what is it described? What is it supposed to be? So in terms of what the Commission has proposed, it's proposed a national collection body to be established to collect information from entities. So we're talking about companies there. The information should be provided to the collection body in data extractable format, machine readable, XBRL. The information should be made available to ESMA via an API, and ESMA will publish this information. It should be the information be accompanied by an electronic seal. It should be searchable in all EU languages, it should be free. So here we are. And I suppose the piece of legislation itself is quite simple. It's only 14 articles, but it's accompanied by 2 omnibus pieces of legislation. One is a regulation which amends 16 other regulations, and the second is a directive which amends 20 directives. So there's actually quite a lot in there that you don't see on the face of it. Now, I might just pass back to Willem, unless you want me to tell people where this is at the moment, Willem, or unless you want to come in with some points yourself now.
No, thank you, Andrew. I don't have any points now. So if you want to round off, I can go to the things to consider.
Yeah. So I'll just tell you where this is. As you know, when a piece of European legislation is published, it takes 2 separate courses. One goes through the Council, which is the 27 member states, and the other goes through the Parliament. This has been on the table since the start of this year in the 27 member states, and they've started to dig into it a bit and found some issues. There's issues in terms of scope, costs, and others, which I think Willem will go into. The European Parliament haven't really got to consider this yet. So they're looking between which committee it should go on, whether it's going to be the jury committee or the econ committee. So there's a discussion in-house there. But when these things get decided, they can move quite quickly. So it's important for people who are interested to get involved as early as possible. I'll pass that back to you, Willem.
Yes, thank you, Ambrose. As Ambrose mentioned, this is quite a complicated process, much of which we don't really see, but the things that we do know about this come from both the consultations that have taken place and also some information that has come out of the process, even though that's informal. At this point in time, there are several things that I think we should share with each other here. The considerations, the issues that you could have with ESAP. First, and I think foremost, is the very ambitious timelines that the Commission has set out. Originally, they wanted ESAP to be in place by January 1st, 2024. Now, I think everybody is aware that time is flying by and there still has not been a decision on anything. So that timeline looks very unrealistic. The latest things that we have heard is that a recent proposal mentioned January 1st, 2026, and that is for listed entities only. So that would give us some more time to get our heads around it, and that's just us, as a profession. But more importantly, the question about the governance model: who is actually going to run this ESAP? Initially, ESMA was mentioned, but a lot of parties, they mentioned their doubts. They shared their doubts about the ability of ESMA to be able to run such a system. So there's also talk about outsourcing this role. And of course, Ambrose mentioned that there's a cost aspect to this. Will it be state EU funded, or will there be a private funding part, which means that users of this ESAP would need to pay for certain services, certain information, for example, bulk downloads would be priced. I mean, those topics were on the table. Getting back to another aspect is the scope. I think that Ambrose also mentions what is exactly being disclosed using ESAP. Of course, annual financial statements, sustainability information, that's clear. But during the consultation, it was also noted that some other information could be part of ESAP, which was not really in the phased approach that was proposed. Of course, for us, it's important as auditors. I mean, will this with or without the auditor opinions that may or may not be there? Will this be separate, or will this be together? These are all questions which are still on the table. Then there's the who question. It's clear that listed entities need to be submitting their information to these national collection bodies. But there's also talk about large non-listed entities and even SMEs somewhere down the line to have to report their information through this mechanism. So there's a lot of entities which are possibly affected by this, and it's very important that we keep a close eye on what eventually comes out of the EU process. Then there is this question of the machine readable format. Of course, we know about ESEF, and we know what's in the CSRD directive. That makes all mention of machine readable formats and tagging. But how about information and reports which have not been filed in a machine readable format? Automatic conversions have been mentioned in the proposal by the EU, but that will be challenging, not to mention reports using different gaps. I mean, how do you handle that? It's good to have this information available at EU level, but if the content of the report is not comparable, then it really adds little to the transparency. That brings me to the impact on the role of us as auditors. First of all, you have, of course, the question of where can our opinion be used for? I mean, if this goes into a mechanism like ESAP, how do we make sure that the opinion that was issued with the original financial statements is still there? I mean, there aren't any safeguards there, because not all opinions are electronically signed and linked to the original report. I mean, measures need to be taken to account for that. Then there's the scope of the opinion. Does the opinion also refer to any tagging that there's in the report, especially if all the automatic conversion is on the table and the original report was not tagged? I mean, what does that mean for our opinion? How do we respond to that? In that respect, it's important to be aware of the 1 or 2 document model that is being used across EU member states, which, if I boil it down to a very simple statement, I mean, is our auditor opinion given on a paper or on a digital document, and which document, which report is actually the official document, and which document is derived from another report? Then you have the question, okay, is the original report going into the ESAP, or is the derived report going into the ESAP document? Mechanism. I think it's clear there's an opportunity for us as auditors to add trust here. But if we don't act, there's also a risk here for us in terms of our relevance. So as Accountants Europe, will be, of course, looking out for this, what comes out of the EU process, and then, of course, we will respond as soon as we can. Ambrose, anything to add to that before I go to the closing remarks?
Yeah, I think you've summed it up very well there, because it's on the face of it, it's a really good initiative. Nobody can argue with it. But as soon as you dig into the detail, the problems arise. And when we talk about 36 amendments to existing directives and regulations, the interoperability between those, other issues that may arise, and then the short timescale, we have to be concerned. Now, I think also what member states have found is this is just a gigantic IT project. And with all IT projects, they tend to run over and cost a lot of money. So what they're trying to do, as far as I'm aware, is to get a pilot going with the information that ESMA already has on the Transparency Directive and also the prospectus regulation. So that would be a good way of road testing this before the other 34 pieces of legislation are brought into this. But yes, I agree with you completely, Willem. I mean, we have an opportunity to get involved and offer our expertise, because maybe there isn't as much of our expertise around the table on this decision making as there should be.
Yeah, I couldn't agree more, Ambrose. And I mean, I keep explaining to people why it's important for us to be involved in something as seemingly technical as ESAP. But I think it's clear to everybody now that ESAP, CSRD, and ESAP, they have an interconnection. They have a kind of a symbiotic mechanism, so you cannot really separate them going forward, because they are so critical to a lot of EU initiatives. So closing off, I would say that the 3 initiatives that we've discussed today, they will increase the transparency of the EU capital markets information for all stakeholders. And in addition to that, the combination will also accelerate the level of digitalization of that information across the EU, and specifically through the increased use of digital tagging, although not only. But implementing ESAP will be challenging. That is clear to everybody. And a phased, well thought out approach, in our opinion, will be crucial. So Accountancy Europe has been and will continue to contribute actively in this process, from the perspective of our profession, but also from the entities that we are closely coordinating with. And we believe this is important to build the trust in the EU capital markets information that we all want. So with that, I want to hand it back to you, Haroon.
Well, many thanks, Ambrose and Willem. Indeed, we were very efficient and we were able to cover the main aspects, but also raise some questions about these 3 large IT projects at the EU. I'd like to take this opportunity to thank wholeheartedly to our partners, Workiva and Top & Merrill once again, the participants who have been watching us and submitting their questions, our moderators and speakers, of course. I would also like to echo with Willem in saying that at Accountants Europe, we will keep closely monitoring the developments and the debate, and we will do our best to contribute to the EU's policy objectives of digital and green transition. On this note, I can confirm that this is the end of our webinar. Thanks again, everyone, and have a nice evening.
Thank you. Bye-bye.
Thank you.